Hello, everyone. Welcome to the Newsbrowse News broadcast. The Canadian press reports that North American stock markets experienced a strong rally, while oil prices saw a significant decline, following Iran's announcement that the Strait of Hormuz is fully open. This declaration by Iran's foreign minister, Abbas Araghchi, alleviated market fears regarding oil supply disruptions, which had previously fueled concerns about inflation and economic growth. The S&P/TSX Composite Index climbed by 294.06 points, reaching 34,346.29. In the U.S., the Dow Jones Industrial Average surged by 868.71 points to 4,947.43. And the S&P 500 index rose by 84.78 points to an all-time high of 7,126, marking its third consecutive week of substantial gains. The Nasdaq Composite also increased by 365.78 points to 24,468.48. Meanwhile, the June crude oil contract plunged by 80 market dollars by 2,102,020 sortie, 9 hijras dollars. Despite the drop, oil prices remain above their pre-war level of $77, indicating lingering market caution about the ceasefire stability. Analysts noted the immediate market reaction, but also highlighted the tighter physical oil market compared to the financial market, especially as the Northern Hemisphere approaches its summer driving season. On the TSX, consumer cyclicals and basic materials sectors led the advances, while the energy sector ended in negative territory. The Canadian dollar strengthened against its U.S. counterpart, trading at 73.15 cents U.S. According to Dusawant, Iran's foreign ministry declared the strategically important Strait of Hormuz fully open on Friday during a ceasefire. This announcement was welcomed by former U.S. President Donald Trump, who claimed Iran had pledged not to block the strait again. However, Iranian military media promptly released information from sources within Iran's Supreme National Security Council, outlining 3 stringent conditions for vessels traversing the strait. These conditions stipulate that ships must be for commercial purposes only, strictly prohibiting military vessels. Furthermore, no vessel or its cargo can be associated with hostile countries. Lastly, all navigation activities must adhere strictly to previously designated routes and be conducted under the supervision and coordination of Iranian armed forces. Adding to the complexity, the semi-official Mehr news agency cited Iran's supreme leader Moshtaba, stating that this crucial waterway should remain closed due to its decisive role in recent conflicts. Market analysts suggest that despite Trump's optimistic remarks, Iran's imposed conditions indicate continued control over the waterway, particularly the restrictions on hostile nations, leaving future uncertainties. Consequently, the global shipping industry remains highly cautious, with major carriers like Hapag-Lloyd delaying resumption of passage due to ongoing safety concerns, emphasizing crew safety and anticipating weeks or months for operations to normalize. The International Maritime Organization is also verifying Iran's announcements against international law regarding freedom of navigation. According to Newswire.ca, a significant real-world study presented at ESCMID Global 2026 by the UK Health Security Agency, UKHSA, has found that maternal vaccination against respiratory syncytial virus, RSV, dramatically reduces the risk of hospitalisation in young infants by over 80%. The study, the largest of its kind, included nearly 290,000 infants born in England between September 2024 and March 2025. Following the introduction of a national maternal RSV vaccination program, researchers observed that infants born to mothers vaccinated at least 2 weeks before birth had an 81.3% lower risk of RSV-associated hospitalisation compared to those with unvaccinated mothers. This protection was even higher, reaching close to 85% when vaccination occurred at least 4 weeks before delivery. The findings also showed a 69.4% effectiveness in preterm infants. Airlines are reducing routes this summer in response to surging jet fuel costs amid the ongoing Iran war. CBS News reports jet fuel prices have doubled since the conflict began on February 28th, significantly impacting airline operating expenses, which typically see fuel account for 25% to 30% of overall costs. Airlines, having pre-sold tickets based on stable fuel price expectations, are now canceling less profitable routes to mitigate losses. Delta Airlines announced cuts to 4 routes this summer, including services from New York's JFK, Detroit, and Boston to various destinations through September. Air Canada is also suspending routes from Toronto and Montreal to JFK. International Energy Agency head Fatih Birol warned that European airports have only about a 6-week supply of jet fuel, potentially causing disruptions for U.S. travelers flying to Europe. While the Strait of Hormuz has reopened, analysts expect it will take weeks to months for fuel supplies and oil prices to stabilize. According to NPR, the Strait of Hormuz has reopened to shipping, a development that might suggest a return to normalcy. However, the insurance industry is not yet ready to declare the area safe. Premiums for cargo and oil vessels operating in the strait have seen a significant, indeed skyrocketing, increase. This reluctance from insurers highlights the complex and persistent realities of the conflict with Iran. The article raises a critical question about how the perspectives and pricing models of insurers can offer a deeper understanding of the ongoing war's true impact and risks. The elevated insurance costs signal that the underlying geopolitical tensions and dangers in the region persist. That's all for this video. Thank you for watching. See you in the next video.